So we expect the global economic recovery to continue on track. GDP growth could slow down. We're expecting GDP growth to slow down following some supply shocks as higher energy price and bottlenecks that we're seeing across many sectors. But the recovery will continue. Inflation will remain higher than in the last decade, but we expect that those price pressures to ease, especially from some point in next year. So the eyes are gonna be on central banks. They're gonna have to decide when exactly to withdraw the monetary stimulus that they have been introducing up to some months ago. In particular, the Fed, the Federal Reserve of the U.S., they are expected to start the tapering, the reduction in the process of purchase of assets this year, and we expected them to start hiking policy rates by the end of the next year. In Europe, the ECB is expected to be more cautious and to have more patience. Basically, the recovery here is going on at a weaker pace, and inflation pressures are not as big as in the US. So the ECB can afford to wait more. So we expect the monetary conditions in the Eurozone to remain supporting economic activity. Yes, in fact, we could get more inflation than we are expecting. And that would be a problem because if the central banks, and particularly the Fed, if they decide to hike rates further to fight those pressures, they could create risks, especially in debt markets and in emerging markets. And on the other hand, if they decide to maintain the stimulus and to not hike interest rates, so that could reinforce inflation trends, and that would be also a problem. And other risks include a further deceleration in China, more persistent supply shocks, and also new strains of the coronavirus.